Welcome to the Accendo Traders Group. This is our weekend wrap-up trading plan for December 12, 2009. Our website is blog.accendotrader.com, where we put together daily video technical analysis trading plans. These trading plans help us stay abreast of what's going on in the market that can move the market, make sure that we're on the right side of our positions. On the weekend, we like to add in some additional experts like from blogs and test the sectors to see if anything's popping out. But by having a trading plan, we're disciplined and focused, cuts down our research time so we can spend time with our family. The week that was, the Dow's up 82, S&P's up 43, NASDAQ's down. So the first thing to see is that we have divergence. The NASDAQ's down for the week while the other two are up. And the other thing obviously to notice is that, the Dow can do 82 points in a day. And so we're up, but we're up very fractionally. And we're still within the range that we'll see when we pull up the daily charts. So basically we had a lack of conviction again this week. Remember, we've been talking about what's going to be our catalyst, and so far we haven't had it. We did have a little volatility on Tuesday with the lower open and then a higher open on Thursday. You can see that 6 out of the 10 sectors ended down for the week, and that was led by the financials to the downside. And we talked about last week Goldman Sachs maybe leading us to the opposite direction. We also had some commentary by Moody's about the U.S. and the UK ballooning debt, that if this were to continue, I believe, around 2013, if nothing changes, that there's a threat to their AAA rating. They think it's very unlikely, but if the path were to continue down this road, there was a little threat to their rating. Also, we had little other corporate news that really moved the market. We did have a little pre-earning announcement from FedEx. The dollar continued to gain ground, which again is keeping the market at a mixed level instead of continue to rise. So overall, we're still looking for that catalyst. So what are we going to see next week that could be a catalyst? Well, really, I don't know. We got to remember, we're getting ready to go back into another holiday season. Wednesday, we do have the FOMC. Certainly can move the market if they put some commentary, some language out there. More than likely, the rates are going to remain the same. But if they put some language out there about the economy, that can move the market. Tomorrow, nothing out on the economic calendar, nothing to worry about as far as earnings. Later in the week, we do have RIM that, could move the market a little bit. And there are our split plays. So here we are at our lovely overview site, FinViz. You can see in our little Rubik's Cube that we have a mixed, and even though this is Friday's action, this really can tell us what we are for the week. Once again, you can see Goldman Sachs down, JP Morgan down, some other financials up, but having Goldman Sachs down, JP Morgan down is certainly not good. Also notice Apple down, Intel down, and that kind of takes us to what's going on here in the NASDAQ. Look at the Dow. The Dow took off, came down, and went up again. Notice that it never went below 0 for the day, whereas the NASDAQ kind of went up, did go well below 0 for the day, and just basically rallied back to that break-even line to close. The S&P went up, came down, and tested it. So you can see again that the Dow was stronger than the other two indexes. But overall, again, when you look at the week numbers, nothing is showing us conviction, and we really need the traders to come in. But as we go into a holiday week, are the traders willing to risk their yearly gains over, light trading? As we switch to the internals and look at it over the week, you can see a lot of green, which can be deceptive because, yes, we have some bullish breadth. The NYSE's, anything above 50 is bullish. Anything below 50 is bearish. And we do have some, bullish numbers there. But when you actually look at the volume and see the up volume compared to the down volume, you see that we really don't have a lot of volume. So even though we have bullish breadth, there's not a lot of volume to put conviction, momentum behind that. Same thing with our new highs. We are continuing to make new highs, but our numbers are are pretty much staying level. So that's certainly good compared to 2 weeks ago where our new highs, I mean, even if you look over here, we had 38. We're still in the 200s, which is good, but we're really not, again, breaking out of the range that we're in. Finally, on our advancers, we can see that we do still have more stocks moving up than down, also helping with our breadth. But we're, again, the theme of the day is going to be, where's the conviction? As we start off with the Dow Jones, the first thing you see is this range that the market has just begun, basically since mid-November, and that is a bottom of 10,200 and a top of about 10,500, and we've basically been trading within that range for the past month. And if you remember in our videos, we talked about the 10,500 level here, because we were saying, you know, here's where those wicks are. We need a close above those wicks to confirm a move to the upside. Also, we've been talking about this wedge that basically comes from the October 2007 highs and the March lows. So we've really just been trading in a range for the past month, and this whole past month we've been talking about what's going to be the conviction, or what's going to be the momentum, the catalyst to move the traders to push the market either way. You know, as future traders, we don't care which way it goes. Now, the S&P 500, also you can see the range, about 10,080 as the bottom, and about 1150 as the top. That is the range of the past month, but you even go as far back to go down here to 10,025 was also a range, even going back to October. But our short-term range is definitely here below 10,080 and above 1120. Same type of range. Look at the volume kind of dying off a little bit. That's also been a sort. Now, obviously, I can't give my same spiel about the volume because it's better than what it was. On the NASDAQ, we see really a bigger picture in reference to the consolidation. Not as tight of a range, but you can really see that it's just really not going anywhere. And the NASDAQ led us up from the March lows and really just hasn't gone anywhere for the past 2-3 months. And remember on our Rubik's Cube, when we were looking at the market overview, and we're showing you Apple down, and we're showing you Intel down. And if I take a quick second here and click on Google, you can see Google has already made lower highs, has already broken the 50, certainly weak and bearish. And this is actually was a great time to get in because it retraced back into the 20 moving average. That was a great bearish entry. Switching over to a longer term chart, we're on the weekly chart. This is the YM. We got a linear regression here. You can see that from the March lows, we've really just been hovering right here in the middle, haven't stretched up to the top, haven't stretched down to the bottom. On our internals, what's good about this, when we were looking at the daily breadth, we said, well, you know, it's mixed, and it is mixed. We've already missed the 2 buying opportunities that our long-term charts were giving us, and we're sitting right here in the middle. But also on the long-term charts, on the daily charts, we said advanced decliners were good, but when you really look at it over the long term, you can see that the advancers, decliners have outpaced the advancers over the long term. And we're maybe seeing a little swing here, and this is what we're seeing on the daily chart, but you can see we had two big peaks here on our long-term chart. I'm going to switch over to the ES real quick just so our S&P folks can take a look. And you can see, voila, basically the same story. Ending with our educational portion of our video, we're talking about managing expectations in the book Trading in the Zone by Mark Douglas. And he basically says that there's nothing that has more potential to creating unhappiness, more importantly, destroying your trading career, than unfulfilled expectation. And this is a hard thing to understand, and this is all about the psychology of trading. And your expectations is a huge part of your psychology. You know, just because a rising 3 pattern is forming today doesn't mean it's going to complete. Just because your system has great checklists and criteria doesn't mean that it's going to work 100% of the time. And if you don't manage your expectation, the first time it goes wrong, you're going to go buy another system, go to another guru. You got to manage your expectation and make adjustments, but don't allow one trade to ruin your career. We have got some great partners. Our Futures Trading Room, 10-day trial for $29. Check that link. I'm in that room. Alex is a great leader. I love the education that he shares each and every day. A great broker with intraday E-mini margins as low as $300. And if you go through our link, you get 20 free contracts. And for those of you ready to jump into futures, we got a futures day trading plan that is affordable and it helps you jumpstart your trading. Again, also, we have another video here on getting started in trading futures and why futures are the best investment vehicle. We're putting out our watch list each night on our Twitter account to join there. And I will see you guys next time.